Hi guys, uh, nice to see you, Ian, Nona, Dory, John, and others. Just can see. Okay, Victor, Peter. Okay, great. Now, guys, today we're going to talk about Syntel. We've already looked at this company during our club, but we didn't discuss it in details. And some of you asked, like, what is it? Is it value trap or bargain? So should we invest or shouldn't we invest? So this masterclass is the nature of trying to understand why this company fell in price so much, and is it a good time to buy, or maybe we have to stay away from the company. Okay, before I start, I'm going to tell you like disclaimer. So this masterclass is general comment and education. Okay, so despite we're going to talk about this specific company and we're going to look at different strategies, you have to understand that you invest your own money and you have to take your your personal circumstances in consideration before you allocate any capital in this company or any other company. So please put a plus that you understand that it's not the specific advice that you should invest in this particular company. Okay, great. What we're going to do, we're going first of all look at current market situation and see where we are and what we can expect from the market during next month or so. Then we look specifically at Syntel, and we look at fundamental analysis. So we look at financials of the company and also technical analysis. And then we're ready, if we decide to invest in Syntel, what kind of strategies we can use in order to profit from this company. Okay, and then we'll cover some news and then Q&A, and which you can prepare during this class, or it's not so many people here in any way, so you can ask during the like slides, so if you have something specific. Okay, indexes, Dow Jones Industrial Average. Remember that this index represents 30 biggest companies by their capitalization, and as we can see from 2008, it's steadily growing. We could see in 2015 it was a flat, nearly wholly it was flat, and now it's kind of recovered that flat area. So if we can see that we can divide it by two, fast line and slow line, and most of the time it was in a fast line, and only in 2015 and in 2011 it's kind of dipped into slow line. But now we can see it's catch up with the previous line, and it's again in this uptrend. Last masterclass when we discussed, it was approaching the resistance line, and we were kind of predicting and discussing that it could go back, and if it's kind of goes, first support would be the middle line, which breaks down to these two lines, and we can see it's like reached there, nearly reached there, and now last Friday it was moving up again. So now what can we expect? First of all, we can expect, like if we go to maybe to slow, that's what is happening. So you can see that few rolls on a downtrend. It was for the last couple of weeks, and then last Friday it broke through. It was a gap here, opened with a gap, and practically stayed on the same level all day. Now, what can we expect? First of all, if it goes up, continue go up, so first level of resistance will be the highest point, okay, because that's the highest point in its history, okay, and of course all traders will be watching it precisely and would be really careful, and every time when it's kind of start moving back down, they would sell it. Okay, so we easily can expect that this resistance level will be a strong level. Okay, if it breaks it through, then we can expect that it's continue to go further to the next like trend line resistance level. Now, if it doesn't go further, so then we can expect that it might go back to support line, and if it breaks through, it can go to the slow line, which is lower. So you have to watch it because the market is high right now, and that's why it's quite difficult to find any company which is undervalued. Majority of companies, they are overvalued at current moments. Okay, so that's Dow Jones. If we look at S&P 500, very similar situation. We can see also it was on downtrend for the last couple of weeks, for the last 4 weeks, and then we can see that it broke through the resistance line on the downtrend, and now we can see it's again, it shows the movement upwards. Again, similar to Dow Jones, we can expect that the highest point will be next level of resistance, and if it holds this level, so we can expect that it could be parallel, okay, similar to here, kind of, some kind of parallel trend for a while, and then we'll see what is going to happen. Any political movement, economical movement might affect the Dow Jones, and a lot of investors and traders and market participants, they expect that the market has to pull down. So very easily we can see that it might go down for about 10-15%. And that will give you a great opportunity to enter all the positions which you are probably watching right now. Now, if we look at Nasdaq, it's a bit different situation. Last time we we saw that it's broke through the top resistance line of the trend, and now we can see it's kind of trading sideways. If Dow Jones and S&P 500, they were on a downtrend for for a few weeks, Nasdaq was a parallel trend, so it didn't go down. We can see it's 1, 2, 3, 4 times it tested the resistance, and last Friday it broke through. So now Nasdaq, it's the highest high in its whole history. Okay, and based on that, I can see that indexes, they have potential to break through that resistance. So when Dow Jones and S&P 500, they will reach that point, they might break through because Nasdaq already broke through. So it's like a first index which went higher. Okay, so pay attention to that. Okay, but again, if it can pull back, so everything what goes up sometime eventually goes down, and we can expect that it can go back to the same support level or even lower. Okay, so be aware of that. Okay, and the next index, it's a volatility index, or index of fear, some people say it. Usually it works like mirror image of other indexes. When Dow Jones or S&P 500, they're high, VIX is low, and when the Dow Jones, S&P 500, Nasdaq, they are low, these indexes are high. So if you remember 2016, the beginning of the year, all indexes, they went down, and some of them, like Nasdaq, went about 19% down. We can see that VIX was at the highest point there, and every time that's Brexit, okay, and that's other two pull down, that's probably election here in November. So every time we can see that when the index goes up, VIX is low, and vice versa. So we can see that now VIX gap down, where all indexes are up. Okay, and if you look at this point, so that's the most dangerous area to buy. So the best area to buy when the VIX is high, okay, because it represents the lowest points of share price of indexes. Okay, now, is everything clear about the market? If you have any questions, please ask. But remember that the reason why you're looking at indexes, even if you invest in individual companies, that when the whole market goes down, it pulls down your shares too. And first of all, don't buy, at least try not to buy when everything is high, because when it pulls down, you might get much better chance to enter the position, okay, in general. And sometimes you need to wait a couple of weeks in order to get to this level, sometimes few days, sometimes months, okay.